All right, good day, folks. Let's take a look here at last week's COT data, commitment of traders data. Now, we operated for several months without updated data due to the government shutdown, but we have since caught up, and now we've got fresh data where we can track the smart money moving in and out of commodities. So if we look at last Friday's CFTC COT report, showed that speculators, non-com speculators, non-commercials, these are the hedge funds, the asset managers, smart money, sold a lot of corn and a lot of soybeans. This is due to higher USDA yield and larger harvested acres in corn, lower USD exports in soybeans. Now, this is the shortest that funds have been since September of 2024, about 16 months ago. So funds have a lot of firepower if there are some South American production threats or maybe some bullish macro catalysts in the coming weeks. If we look here at the selling that went on, basically had 22,000 contracts liquidated on top of 46,000 contracts added. So that is a net change of 68,000 contracts. So you can see now the net position sits just around 60,000 contracts net short. Now, what I want to turn our attention to here is the seasonality of corn. Seasonals are very bullish in mid to late January, and we're about halfway through the most seasonally bullish 60-day window period of the year for the ag complex that runs from about mid-December to mid-February. And that bullish setup really comes from South American weather risk, chilly U.S. farmer selling, and the fresh interest in holding commodities into a new calendar year. So we think that looking at this market here provides some decent opportunity from a value perspective. Again, we've got kind of this three-pronged approach lining up. So we've got price or technicals here at deep value areas. We know that funds are heavy net short, and we know that seasonally we should be pointing higher. So this gets us excited about considering low risk entry points in corn, also in markets like soybeans, and also markets like wheat, where we know prices are depressed, seasonal should point higher, and if funds start to short cover and then also add longs, that could provide some explosive opportunities to the upside.